Today we're looking at the Vanguard International Shares ETF, VGS, listed on the Australian Stock Exchange. We'll go over the ETF fact sheet, including the management fee, the index the ETF tracks, dividend yield, payment frequency, and the fund's performance. VGS is an ETF provided by Vanguard, who own and operate the fund. Vanguard are the ones who own the underlying shares in each of the companies. So when we buy shares in the ETF, we buy from Vanguard, who continually issue new units in an open-end fund, and not the individual company shares inside the ETF. VGS tracks the MSCI World Index excluding Australia, before fees and tax. The ETF provides exposure to many of the world's largest companies listed in major developed countries, offering low-cost access to a broadly diversified range of companies outside of Australia. It is also exposed to international currencies, which can affect returns positively or negatively. It pays distributions, which are dividends from the ETF, 4 times a year, with a yield of 1.74%, which would equate to $1,740 of dividend income for every $100,000 invested. It has a management expense ratio of 0.18% per year, so for every $100,000 invested, it would cost $180 per year, and this fee is automatically subtracted from the ETF unit price, so you won't actually see any fee transactions being taken from your brokerage account. Since VGS tracks the developed international markets, it has a large allocation in IT companies at 24%, followed by financials at 15% and healthcare at 12%. Real estate, utilities, and materials make up the smallest percentage of the fund, under 4% each. The benefit of investing in international shares is their broad diversification across multiple industries and foreign currencies. The primary focus and returns from international shares comes from capital gains, whilst providing some dividend income. Living in Australia, I always look for Aussie domiciled ETFs, as it makes tax returns easier since I'm not technically investing overseas in the US. Instead, I'm buying shares of the Australian-based fund that own the international stocks, so there is no need to complete any W8 BEN forms for Australian taxation purposes. VGS is domiciled in Australia, so there is no need to complete a W8 BEN form. Since inception, VGS has had an average annualised return of 13.21%, which includes both capital growth and distributions or dividends. Past performance is no guarantee of future performance, but it's a good sign of improving business fundamentals, continually driving each individual stock higher within the ETF. With dividends reinvested, the cumulative return becomes much higher. Reinvesting these dividends creates the larger compounding effect, exponentially increasing our returns the longer we have our money in the fund. This is the sort of approach I take investing for the very long term, using ETFs, to one day live off the investment portfolio as passive income through dividends or selling down small parts of the position.